Saturday, April 20th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back. He's been outside quite a bit these days because it's much warmer and sunny, so he likes spending time out in the garden. Today I want to talk about something that happened 15 years ago, literally 15 years ago. This week basically marks 15 years exactly since the FT, or the Financial Times of London, wrote an editorial disparaging gold. It's called Going Gold, the pointlessness of holding bullion continues to sink in. And I've spoken about this before, so some of you might remember the story, but as I get new subscribers regularly, and I understand that people don't watch all my videos that I've done in the past over the last 3 years. So it's always good to update. And of course, it's like an anniversary, in my opinion, that I think is quite important. So what's the importance for me of this editorial? Well, at the time, on the 16th of April, 2004, it was important enough that I cut up the editorial and I laminated it and wrote the date, FT editorial, April 16th, 2004, and the price of gold at the time was roughly around $400, I hope, about $400.65. So the story of this goes back to when I was still working in the City of London in 2004. City of London, of course, is the financial district, a bit like Wall Street in New York. And I used to get up very early every day, around 5 o'clock, get ready, have a shower, walk the dog. Before Billy, there was another Billy who was a Shih Tzu as well. So this is Billy the second. And Billy, the first Billy used to like his walks very early. So yeah, I used to get ready, take old Billy for a walk, and then go to the station around 6 o'clock and get my 6:08 train to London Bridge. And while I was waiting at the platform to get my train, I used to have the FT, and I used to look at the headlines and then turn towards the editorial page. I like to read editorials. And this is what I saw, going gold. The pointlessness of holding bullion continues to sink in. And that at that time, April 2004, I'd been buying a little bit of gold. I had been looking at gold, the history of money. It opened my mind to the system. I knew there was something wrong. And when I saw that this article, I realized, the FT is a propaganda arm of the paper masters, the fiat money masters. So I want to, so before I go into this editorial, I just want to, tell people, I'm not here trying to convince people to buy gold or buy silver. I'm not trying to sell anything here. I'm just trying to give you my experiences that I've had with precious metals and also with the mainstream media. And it's up to you. If I say something that you think makes sense for you to take in, I believe in, people have their own free will and they're free to do what they want. So I'm just giving you my experiences, and hopefully, it'll be worthwhile and valuable to you. But before I go on to the editorial then, I just want to look at the prices. And I've got LBMA prices for gold in dollars, pound sterling, and euro. So if I go back to 16th of April, which when this editorial was written, the PM fix of gold was 400.85 in dollars, and the AM was 399.75. So let's say the price of gold was roughly $400 on that day. And now, present day, 16th of April, the AM fixing is 1283 and the PM 1276. So I took 412.75. So that gives me a 218.75% gain. So I'm glad I didn't listen to the FT and forget about gold, and put some of my savings then, and then my future savings as well. I'm glad I didn't leave it in pounds, dollars, or euros. So what about the pound? Well, let's have a look. April 2004, on the 16th of April 2004, it was around 222.95, so 223. And where are we now? The latest fix is 980, but on the 16th it was around 977. So I took 981, let's say. So from 223 pounds, it's now 981 pounds. So I'm even happier that living in the UK, I didn't keep my savings in pounds, because the price of gold went up 340% since this FT editorial. Euros is the same story. Euro is more in between. It performed, gold performed a little better than the dollar, but not as good as against the pound. It was at 333 on the 16th of April, and right now is around 1137. That's 241%. So yes, don't believe everything you read, and don't believe everything you hear on the internet, nor even me. But I just wanted to show you that before I go into this editorial. It's almost as if they're trying to give people, do a head fake for people, try to get people away from gold. It just sounds so contrarian of what happened after this, after 2004, right? So let's read the editorial. The pointlessness of holding gold bullion continues to sink in. So I'm quoting the FT editorial. I'm not sure who wrote it. There's no, it was like an anonymous editorial. It was probably the editor of the FT at the time. I don't really know who he was. So it says, the barbarous relic, as Keynes called it, is crumbling to dust. Well, first of all, Keynes called the gold standard a barbarous relic. When even the venerable N.M. Rothschild has quit the gold market, and the Bank of France, amongst the most stubborn of the official gold bugs, is thinking again about its bullion holdings, the end of gold as an investment has come a little closer. So back in 2004, what happened is the Rothschilds decided to leave the gold fixing mechanism at the LBMA. And they also decided to leave, I think, the gold refining business because it wasn't paying off. But it doesn't mean that the Rothschilds themselves don't own gold, right? So, and the Bank of France, I don't think they sold any gold, since then. I continue now. It will not be before time. The fetishization of shiny yellow metal, decades after it ceased to be used as the anchor of the international monetary system, is a lingering anomaly in modern financial markets. Perhaps Rothschild's last service to the bullion market could be to keep a live gold trader on display behind glass as a reminder of a bygone age, like the former coal miners who now make a living giving tours of defunct pits. Well, what I would say is that it's the current system that is an anomaly. If you look back, 2,500 years ago, it's only, since 1971 that we've had the whole world on a paper system. So I would say that's an anomaly. I would say the paper system is unstable. 4 years later, we know the system almost collapsed. A system based on fiat money, paper, central bank paper money, right? So I continue. The one advantage of gold as a reserve asset is that unlike assets based on fiat money, governments cannot make it worthless by inflating it away. Well, I agree with them on that. But in an era of low inflation, and given that independent inflation targeting central banks are the norm across the industrialized world, that risk has very sharply diminished. Well, that's more rubbish, isn't it? If you take a basket of goods in 2004 and look at it today, how much more paper money you need to buy that same basket. And even if central banks are able to keep a 2% target of inflation, that's still, over 40 years depreciating the currency massively. Under sound money and a gold standard, there's zero inflation. And we don't need inflation for an economy to flourish or, we don't. Indeed, for both private and official investors, gold is now a rather risky asset with a nil or low return. Well, we've seen now that actually a zero return is very good these days. Unlike negative interest rates, right? We know a lot of countries, trillions and trillions upon on bonds, government bonds out there are yielding negative interest rates. The intrinsic value of gold determined by its use in various industrial processes is well below its market price. Well, that's another fallacy there, because gold is money because it doesn't have any other virtually no other function other than jewelry, which is also money. It's not really used for, and that's why it's money, right? So it doesn't really matter the market price for industrial use. Gold does not grow, so its value to any one investor as an asset is dependent on other investors also holding it as an investment asset. The gold price hangs precariously by its own bootstraps. Well, I would say, yeah, it doesn't grow because, if you hold on to it, I guess if you don't lend it out, yeah, it won't give you an income. But it's the same thing with paper money or fiat money. But the important thing about gold is that it holds its purchasing power over time, while fiat money doesn't. So I continue. For private investors to hold gold on this basis is their own foolish affair. For central banks and governments to hold it as a reserve asset is a betrayal of the public on whose behalf they are acting. Well, all right, so what happened in the UK? Well, Gordon Brown, the then Chancellor of the Exchequer, or Finance Minister, sold half of the gold of the UK at around $250, $270 an ounce. So I would say that he's the one who he's betrayed the public, not bullion. Their large holdings relative to the size of the market by themselves make gold particularly ineffective as a reserve asset. The very act of official selling of bullion on any large scale to raise cash will itself drive down the price. Well, and we've seen now, last year was the first, it was the first time in 50 years that central banks bought as much gold, bullion, albeit part of that was a lot to do with the Russian central bank. But we're seeing more and more countries around the world, China included, other countries as well, like Poland, and other less developed countries, they're increasing their gold holdings. And maybe that's why, the West has got something against the Chinese and the Russians, because they're taking all, the real money is flowing to them. And that's just a reflection of their economic, the fact that their economy is run on a sounder basis, that they actually have savings, that they actually producing real goods, and not like in the West where we live off credit and speculation. And that's not to say, that China has had kind of a credit bubble in the last 10 years, but much less than the West. So I continue. This danger was amply demonstrated by the UK's unhappy experience of trying to sell some of its gold holdings. Announced in 1999 in a sensibly open and transparent fashion, the sale sparked such a fall in the global bullion price that a group of central banks signed a concord limiting such sales. That has recently been superseded by a new agreement providing for limited official sales. So actually it wasn't a sensible, open and transparent fashion that Gordon Brown sold the gold. It was a stupid way that he did it. And I would argue there are rumors that they were trying to drive the market down because there were some bullion banks who were in trouble. They were getting short squeezed. They had a huge short position and they couldn't get out of it. So I would say actually that Gordon Brown pre-announced, which is something really stupid to do, but he actually had a reason to do it. And there's talk that it was for Goldman Sachs. So that's what I would say. So to conclude, they say, given the pointlessness of holding gold, the speed of its official sell-off scarcely matters, unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply some irrationality on the part of the market, but then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. So, if anything, people are holding more and more gold, not only central banks, but very, very wealthy individuals and families. We know that from, people like Egon von Greyerz, all the growth in private vaults in Switzerland, where the very wealthy hold tons of gold. So this is how they finish. Whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. Well, there you go. When I read that editorial on the platform waiting for the train, I was like first of all, I was a bit angry, but then I thought to myself, wow, this is a good sign. The FT is saying, all this rubbish about gold. I thought to myself, yeah, this is the right thing to do. And that's when I actually realized a lot of the financial press, mainstream financial press, is basically propaganda, really. They really didn't do gold justice and how it's kept its purchasing power over millennia, did they? So, a few months ago, I thought it would be fun to make a mug, the FT fake news mug. So you can actually buy a mug in the Maneco 64 store with that editorial if you're interested. Maybe on a day that gold is bashed down by on the Crimex and OBMA, you can drink that mug and and realize that in the end gold will keep its purchasing power, and that you've got to ignore all the propaganda from the paper boys. FT, of course, like The Economist, it's a mouthpiece for the globalists and the fiat money central banking system. So yeah, 15 years later, we've got, when the FT said it was a pointless exercise to hold gold, gold is up over 200% in dollars, over 325% in sterling, and over 240% in euros. I mean, I think that speaks for itself. If you enjoyed this video, make sure you hit the like button. If you enjoy my videos but haven't subscribed yet, think about subscribing. Make sure you hit the little notification bell above to be reminded of my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great rest of the weekend. Take care. Bye.